Good morning, Trinidad and Tobago, and welcome to the Bourse Report. Well, today we're taking a look at the halfway part of 2025 at local stock markets, which can be described as languishing somewhat over the past few years. It hasn't been that much better in terms of performance for the first 6 months of 2025. Let's take a look at what that performance looked like and what investors might expect in the coming months ahead, and also ask the deeper question: will local stocks be able to recover, and what would be the underlying reasons for that recovery? So in that first half of 2025, we can see that the local stock market has been down just around 4.2%. If we look to the rightmost part of the graph and focus on the Trinidad and Tobago Composite Index in that bluish color, with that index level falling to just over 1,028. All the way back in the financial year of 2021, it was just about 1,498 in terms of that index level, so falling or declining roughly 30% over the past 4.5 years or so. The All Trinidad and Tobago Index was down just about 4.7%, including all of our locally domiciled major companies, as well as the cross-listed index falling 2.7% over the first 6 months of 2025. But again, when we take a look at that longer-term trend, there has been some continuous downward trajectory for local stocks over the past several years, starting from the end of 2021 all the way to the half-year period of 2025. For the first 6 months of 2025, some of the major drivers in terms of gainers and decliners: on the positive side, LG Williams B up 66.7%, Unilever Caribbean posting some stronger results, up 26.4%, Prestige Holdings Limited up 14.6%, certainly moved by that offer for acquisition by Agostini Limited. Guardian Holdings up 12.8% with better results, and Deco up 9.8% as well. On the other end of the spectrum, we can see that National Enterprises Limited down 17.4% with a decline in earnings, as well as TCL down 18% or thereabouts, with the reintroduction perhaps of more intense competition in the domestic market. Guardian Media down 19.2%. NGL, in the absence or continued absence of dividends, down 24.5%, and Antimacaal down just about 30% in the first 6 months of 2025. Again, Antimacaal making a bold announcement to give dividends for the next 3 years, and investors would not have reacted exactly positively to that. Now, overall, at a broader market level, with the price decline we've been seeing, we've also been seeing an overall decline in traded values and traded volumes. So, for example, for the first 6 months of 2022, the market traded volume and value would have hit a peak. Let's focus on value in that pinkish column at about just under $1 billion, $918 million in traded value for the first 6 months of 2022. Fast forward to the first 6 months of 2025, and that's fallen off fairly consistently, just about 60%, to just around $350 million again for that first 6 months of 2025. And we can see that has been somewhat continuous, but there appears to be some stabilization relative to 2024 numbers. Just roughly a 1% decline in terms of traded value overall, but again, very lackluster relative to the first 6 months of 2022 and 2021. Now, at a sectoral level, we can see that those declines in valuations have been spread fairly across the board, with one exception, that is the trading and property segment or sector in that yellowish column, which actually appreciated from 2.8 billion in market capitalization to just about 5.5 billion, roughly a 100% increase. However, many of the larger sectors would have declined in value. For the banking sector, for example, which accounts for over 55% of the total value of stocks listed on Trinidad Tobago Stock Exchange, would have fallen from 80.1 billion to 56 billion, or roughly 30% decline. That was mirrored in the conglomerate sector as well, falling from 27 odd billion to 19.4 billion. Non-banking finance, a more dramatic drop from 17.2 to 10.8 billion in that purplish segment, or roughly 57%. And manufacturing 1 and 2 combined, falling from 13.3 billion in value of stocks to 5.8 billion, and over 55% decline. Energy, but the non-energy sector constituent, of course, being NGL, declining 85% in value from 2.4 billion to just about 0.4 billion in value as well. Now, is it all doom and gloom? Is there any value in the market at this point in time? Well, when you take a look at total earnings, we can see that at the aggregate level, earnings have been broadly resilient, albeit a bit volatile. In 2021, for example, aggregate market earnings were just about 8.5 billion. It has bounced around up to as high as 10 billion and as low as 7.6 billion at the half year 2025 marker on a trailing 12-month basis. That has been about 8.5 billion. So we haven't really moved much. But with those declines in prices, we have seen an improvement in relative valuations, with the price to earnings ratio falling from 16.8 times in fiscal 21 at the half year mark to of 2025 to 11.5 times. So what that means for investors, on average, you're paying less for a dollar of earnings on aggregate at the market level. And from a dividend or cash flow perspective for investors, we have seen some increases in total dividends being paid across the market, increasing from 3.5 billion in fiscal 2021 all the way to 4.4 billion in absolute dividends paid in fiscal 2024, and on a trailing 2025 basis, that level is currently at 4 billion. But importantly, with the price correction, we have seen dividend yields rise on average from 2.4% to just over 4% at the market aggregate level. So certainly there appears to be some more incentive for investors from a cash flow perspective in terms of the dividend yield that they receive by investing in the local market. So ultimately, we ask the question, are local stocks still attractive? Well, from a valuation perspective, as we would have seen with those resilient earnings, and those are purely reported earnings, not adjusted for one-off or recurring or non-recurring losses or gains, valuations do appear more attractive with resilient earnings in mind. From a dividend yield perspective, again, that's the cash flow that investors would get for holding on to stocks and being receiving some cash flow while they await or expect to see some growth in their stock values. That has also become relatively more attractive. The fact that over the past couple of years, there has been an increased amount of built-in diversification within local stocks. So you're not just being exposed specifically to Trinidad and Tobago risk or necessarily to one particular type of investment business or industry risk by buying a single stock. And take Massey as an example, a regional diversified, as well as being geographically diversified, as well as being business diversified and offering a reasonably attractive dividend yield as well, and trading at a very attractive valuation relative to historical norms. In terms of an inflationary hedge, stocks do provide that for as well as part of any investor's portfolio to different degrees, depending on the type of stock that you invest in. On the flip side, in terms of macroeconomic conditions, perhaps not where we'd like it to be at the national and perhaps regional level. That might be one cause for investors to remain on the sidelines or perhaps take a lower allocation to stocks. And of course, lower risk asset alternatives are becoming relatively more attractive with increasing yields across, for example, mutual funds, repurchase agreements, bank deposits in some cases, as well as bond yields as well. And that might be one of the contributing factors to some of the repricing that we've seen in equity markets. But certainly, stocks do maintain an important part, particularly for longer-term investors, as part of an investment portfolio over the long run. So well, that's it for this week's edition. For more information, you can give us a call at 2BORSE or 226-8773. Email us at info@borsefinancial.com. And of course, you can check out our website at borseinvestment.com, where all of our research is absolutely free. And you can catch this article for a little bit more context in the business section of the day's Trinidad and Tobago Guardian newspaper. So until next time, stay safe, happy investing, and we'll see you again on the Bourse Report.